Most people think investing is complicated. Charts, numbers, risk, Wall Street. But here's the truth. Investing is not about being smart. It's about understanding one simple idea. Your money can work for you, or you can work for money forever. If you never invest, you will always trade time for income. Today, I'll explain how investing actually works, in the simplest way possible. No confusing terms, no hype, just clarity. What investing really is? Investing is simple. You give your money to something that has the potential to grow over time. That something could be a company, many companies together, real estate, a business. You are not gambling. You are buying ownership. When that ownership grows, your money grows. That's investing. Why saving is not enough? Saving keeps your money safe. Investing makes your money grow. If you only save money in a bank account, inflation slowly reduces its power. For example, if inflation is 3% per year and your savings earn 1%, you are losing purchasing power. It doesn't feel like loss. But over time, it is. Investing helps your money grow faster than inflation. How stocks actually work. When you buy a stock, you are buying a small piece of a company. If that company grows, it earns more profit, its value increases, your share becomes more valuable. You don't need to run the company, you just own a part of it. If thousands of companies grow over time, the overall market grows too. That's why long-term investors focus on time, not timing. What is an index fund? An index fund is simply a basket of many companies in one investment. Instead of picking one stock, you buy the whole market. For beginners, this is powerful because it reduces risk, it requires less knowledge, it spreads your money across many businesses. You don't need to predict the next big winner. You just participate in overall growth. Investing has risk. Prices go up, prices go down. But here's what most beginners misunderstand. Short-term risk is normal. Long-term growth is historical. Markets move in cycles. If you panic and sell during drops, you lose. If you stay consistent and patient, time does the heavy lifting. Investing rewards discipline more than intelligence. The power of compounding. This is where things get powerful. Compounding means you earn returns. Then you earn returns on those returns. Example, if you invest $500 per month and earn 8% annually, over 20 years that can grow into hundreds of thousands. Not because you were lucky, because time multiplied your effort. Time is the secret weapon of investing. How beginners should start? Simple steps. Build an emergency fund first, avoid high-interest debt, start small but consistent, focus on long-term growth, ignore daily market noise. You don't need a lot of money. You need consistency. Even $100 per month matters if you stay disciplined. What investing is not? Investing is not day trading, gambling, getting rich next month, following social media hype. Real investing is boring. And boring is powerful, because slow growth over 20 years beats fast excitement that disappears. Why investing changes your life? When you invest, you stop depending only on your job. You build assets. You gain options. Investing gives you leverage over time. It's not about luxury, it's about freedom. Freedom to choose how you spend your time. Now here's the real question. 5 years from now, would you rather say, I started, or I wish I started? Think about that, because investing doesn't reward speed. It rewards the people who begin.